Normally, when you're looking at Wall Street, there is a very predictable law of physics at play.
Right. Cause and effect.
Exactly. A company steps up to the microphone, they post these financial numbers that absolutely shatter the market's expectations. Their balance sheet is just flashing green across the board.
And investors immediately reward them.
Yes, the stock shoots up. It's a simple, cause and effect that we see play out every single quarter.
I mean, Wall Street usually loves nothing more than a company proving it can print cash faster than the analysts predicted.
Totally.
That simple physics equation, like high earnings equals a stock jump, that's the bedrock of market reaction. But what we're looking at today completely broke those laws of physics.
And that is exactly our mission for this deep dive. Today, we're opening up a massive stack of financial earnings transcripts, market analyses, and news reports from sources like MarketBeat, FX Leaders, and Benzinga. We're trying to solve a huge, real-time Wall Street mystery.
It's a fascinating one, too.
Because recently, Reddit went public with their second quarter financials, and the numbers were phenomenal. I mean, they posted 61% revenue growth year over year.
Which is huge.
Right. By all traditional metrics, it was a home run. Yet, almost immediately after those numbers were released, Reddit's stock plummeted by 10%.
Yeah, fell right off a cliff.
We are going to unpack this paradox to understand the hidden vulnerabilities of the modern AI-driven internet. And whether you are an active investor, a tech enthusiast, or honestly just someone who uses Google to find honest reviews before you buy like a new vacuum cleaner.
Yeah, which is all of us, basically.
Exactly. This story directly impacts how information is going to be delivered to you in the very near future.
This really isn't just a story about a single stock ticker moving up or down. I mean, when you dig into these transcripts, it becomes a story about the changing architecture of the web itself.
And who actually holds the power when artificial intelligence enters the chat. So to really grasp why that 10% stock drop was so shocking, we first need to look at how the core business is actually functioning right now. Because the Q2 numbers they reported are, frankly, staggering.
Oh, they blew it out of the water.
They pulled in $805 million in revenue, which is that 61% jump we just mentioned. And out of that $805 million pie, a massive $762 million is purely from advertising.
Yeah, the top line revenue is impressive. But, for analysts, the real story is how much of that money Reddit actually gets to keep.
Right.
Let's break down some of the financial jargon here. They're operating with 91.5% gross margins.
Okay, let's unpack this, because for anyone who doesn't spend their day looking at balance sheets, how do we actually contextualize a 91.5% gross margin?
Well, think about running a bakery, right?
Okay.
If you have a 91.5% gross margin, it means the flour, the sugar, the actual ovens, they cost you almost nothing compared to what you're selling the cake for.
Wow, okay.
And on top of that, Reddit reported an adjusted EBITDA margin of over 40%.
Remind us what EBITDA means in this context.
Sure. So EBITDA is basically a company's cash profit from their core operations, like before the accountants get involved with things like taxes, debt interest, depreciation, all that.
Right. The raw profit engine.
Exactly. So a 40% margin means that for every single dollar Reddit takes in, 40 cents is pure operational profit. I mean, in the tech, hardware, or retail space, margins like that are practically science fiction.
CEO Steve Huffman gave a quote in the earnings call that I think perfectly explains how they're achieving those sci-fi margins.
Ooh, the oil quote.
Yes. He pointed out that Reddit has accumulated over 25 billion posts and comments over 2 decades. And he called those ongoing conversations the oil for the modern internet, because all of that authentic human dialogue is exactly the raw material that AI models need to train themselves.
It's the perfect metaphor. And here's the detail from the balance sheet that really highlights why that oil is so profitable.
Hit me.
Reddit's capital expenditures, their CapEx, which is the money spent on physical things like buildings and servers, which is $1.1 million for the entire quarter.
Wait, just $1 million?
Yep. Just over $1 million.
That is insane. When you look at the other tech giants right now, the Amazons, Meta, Alphabet, they are pouring tens of billions of dollars into building these massive global networks of data centers just to keep up in the AI race.
Buying chips by the truckload.
Exactly. But Reddit is barely spending anything.
That's exactly the contrast we need to make here. Those giants are spending billions on the physical factories of the future internet. Reddit is essentially sitting back, generating an annualized run rate approaching $1 billion, and barely spending anything on physical infrastructure.
So they just have incredibly low overhead.
Right. They have what we call massive operating leverage.
Okay, but I want to challenge that concept for a second. Looking at this setup, Reddit's business model is basically like a highly profitable restaurant where they don't have to buy any ingredients.
Ah, that's one way to look at it.
The customers walk in, they bring the food, they cook the food, and they serve it to each other for completely free.
Yeah.
And the restaurant just charges money to put up a billboard in the dining room.
That's pretty accurate.
But is this capital light model actually a long-term economic moat? Or are they just renting space on someone else's internet before the bill inevitably comes due?
Well, operating leverage means your fixed costs stay relatively flat, even as your revenue scales up.
Yeah.
Because Reddit doesn't have to build those massive data centers, every new dollar of revenue they generate from ads drops almost straight to the bottom line.
I see.
Their user base generates the content, which attracts more users, which then attracts more ad dollars.
It's a feedback loop.
Right. Plus, they are now licensing that data, that oil you mentioned, directly to AI companies without having to take on the massive structural costs of building the AI models themselves. So right now, it is an incredibly efficient, highly defensive moat.
So we know they're sitting on, 25 billion posts of oil. Let's transition into the mechanics of how they are actually turning that into a $762 million advertising empire.
The monetization engine.
Exactly. What makes a Reddit user so valuable to a brand? Because the sources we are looking at show that 40% of the conversations happening on Reddit are explicitly commercial in nature.
That's a massive percentage.
It is. People are actively discussing products, debating services, comparing brands, and 84% of shoppers say they feel more confident in their purchasing decisions after researching on the platform.
And that specific intent is the absolute holy grail for digital marketing.
How so?
Well, if you were scrolling through a traditional social media feed, yeah, you might just be looking at photos of your friends' vacations or watching viral dance videos.
Oh, you're just killing time.
Exactly. You are in an entertainment mindset. But if you were in a deeply niche Reddit community dedicated to, say, custom home theater setups, you aren't just browsing for fun.
You're trying to figure out what to buy.
Yeah. You are likely holding your credit card, trying to decide which OLED TV to buy right now. Advertisers are willing to pay a massive premium to get in front of that high-intent traffic.
And Reddit is for that intent, too. They recently rolled out a new AI-driven ad stack called Reddit Max.
Yeah, this is a big deal.
The earnings call noted this is resulting in a 17% reduction in cost per action for advertisers. But how does Reddit Max actually do that? Because a 17% drop in customer acquisition cost is huge for any brand.
It's game-changing. So traditionally, an advertising network buys a demographic. A brand says, show this ad to men aged 25 to 34.
Right.
Reddit Max operates differently. It uses machine learning to read the context of a live conversation in real time. It cares less about who you are and way more about what you're actively trying to solve.
Oh, that makes sense.
So if a thread in a running community suddenly shifts from discussing marathon routes to talking about knee pain, Reddit Max dynamically inserts an ad for orthopedic knee braces directly into that specific thread, like right at the moment of highest relevance.
Wow. And the sources highlight some specific brand successes using this exact mechanism. Cozy, which is a modern furniture company, saw a 28% lower cost to acquire a customer.
That's incredible.
And Liquid Dime, the hydration brand, they saw Reddit's dynamic product ads outperform all their other campaigns across different platforms by 40%. So the machine learning integration is clearly working.
The machine is highly optimized. But the vulnerability lies in who exactly is interacting with that machine.
Right. Here's where it gets really interesting. If you are listening to this deep dive in the United States right now, you need to hear this next statistic because you are the product funding this entire engine.
Yes, you are.
The sources highlight a massive disparity in average revenue per user, or ARPU. A U.S. user generates $11.85 per person for Reddit. An international user generates only $2.26.
It's a staggering gap.
It means your digital footprint in America is worth over 5 times more than someone browsing in Europe or Asia.
If we connect this to the bigger picture, advertisers pay that massive premium for U.S. users because of the high purchasing power in North America, right? And because the U.S. digital advertising market is just incredibly mature and competitive.
So brands are just fighting tooth and nail over those users.
Exactly. Brands will outbid each other endlessly for that high-intent American shopper. Reddit's entire hyper-growth narrative, the whole reason Wall Street was so excited about them going public, relies on squeezing more and more value out of those incredibly lucrative U.S. users.
So if the US user is the undisputed golden goose, my immediate thought as an investor would be, what happens to this incredible financial engine if that specific user base stops growing?
Well, that ARPU gap is the exact place where the armor begins to crack.
Mm.
When companies' valuation is entirely dependent on one specific high-margin demographic, any threat to acquiring or retaining those specific users is going to cause market panic.
Which brings us to the turning point in the second quarter.
Exactly.
This is where we finally solve the mystery of the 10% stock crash,
Yeah.
because despite the blowout revenue, the U.S. daily active users actually slipped sequentially.
Yep.
They dropped from 53.5 million down to 53.2 million, and year-over-year U.S. growth slowed to just 6%, while the international side, the side making only $2.26 per user, grew 28%.
And see, a sequential drop in your most valuable user segment, no matter how tiny it seems on paper, is a giant red flag for investors who are pricing a stock for absolute perfection.
Right, they want endless growth.
Always.
Yeah.
But it wasn't just the slight dip in the numbers that caused the stock to plummet from $178 down to $160. It was the explanation CEO Steve Huffman gave for why it happened.
The trigger for the crash was Huffman warning investors late in the quarter that search referrals had become choppy and volatile.
That's corporate speak for trouble.
Big trouble. And when he says search referrals, he is talking about Google. We all know this behavior. I mean, we've all been there. You want a recipe for chocolate chip cookies, and Google gives you an SEO-optimized blog post with a 10,000-word story about the author's childhood.
Oh, I hate that so much.
So what do? You type best chocolate chip cookies Reddit into the search bar because you just want a normal human being to give you the actual recipe.
Exactly. Millions of people append the word Reddit to their Google searches for exactly that reason. They want authenticity, not marketing copy.
Yeah.
For years, Google's unwritten contract with the web was simple. It was, you create the content, we will organize it, and in exchange, we will send traffic to your website via the traditional 10 blue links.
But that's changing now.
Very quickly. We are now looking at the specific threat of Google's new AI overviews.
Right, so instead of giving you those blue links to click on, which lead you directly to the Reddit website where you can be served a dynamic ad, Google is now using AI to summarize the answers directly on the search results page.
It is a fundamental shift in how the internet has operated for decades. With AI overviews, Google is essentially reading the Reddit thread for you, summarizing the consensus of the community, and giving you the answer right there on Google's own page.
Wow.
There is no longer a need for the user to ever click through to Reddit.
It's like you wrote this incredible best-selling book, and the bookstore owner stands in the front window reading the best chapters aloud through a megaphone to everyone walking by on the street.
That's exactly what it is.
Sure, people are getting your information, but nobody is actually walking inside the store to buy a copy. You don't get the foot traffic, which means you can't sell them anything else.
Right.
But wait, I want to challenge this narrative based on my notes here. MarketBeat notes that Reddit is actively making money by licensing its data to Google to train these very AI models. Like, they made $43 million in other revenue this quarter. If my business partner is paying me for data, aren't they effectively cannibalizing their own partner by cutting off my traffic?
This raises an important question, but let's weigh those numbers against each other. Yes, Google is paying Reddit for the raw data. But $43 million in licensing revenue is a drop in the bucket compared to the $762 million Reddit makes from advertising.
Oh, yeah, when you put it that way.
Exactly. Google is extracting the value of human discussion, the actual answers, the nuance, the recommendations, without delivering the referral traffic that Reddit's massive ad business needs to survive.
So Google wins no matter what.
Google has the distribution monopoly. They are using Reddit's raw materials to keep users on Google's properties, rather than sending them away.
So if I am Steve Huffman and Google is essentially putting up a toll booth in front of my web traffic, my first instinct as a business leader would be to build a giant wall around my users and force them into my own app where Google can't touch them. Is that the strategy here? How do they keep that $805 million advertising engine running if the top of the funnel is getting choked off?
Well, your instinct is exactly what we are seeing play out. They are attempting a major strategic pivot right now. According to Huffman in the earnings transcript, the strategy now is to aggressively push users to Reddit's native mobile app.
Making it a destination.
Yes. He explicitly stated that they are not building for drive-by traffic. Instead, they're trying to create a daily destination.
They want you to wake up, grab your morning coffee, and open the Reddit app out of sheer habit, just like you would open Instagram or TikTok. And to their credit, the data shows they are making some progress. The sources note that app user retention has improved by 50% year over year. Although the reports do caveat that this 50% growth is coming from a relatively small base of power users.
Right, and it is one thing to have fantastic retention on a small, highly dedicated core user base who already loves the platform.
Sure.
It is another challenge entirely to scale that behavioral change to the hundreds of millions of people who currently just use Reddit as a better version of a search engine.
It's a huge behavioral leap.
Huge. And this brings us to a crucial and, frankly, quite alarming detail buried deep in the SEC filings. Starting in Q3, Reddit announced they're going to stop breaking out the specific numbers for logged in versus logged out daily users.
Oh, that is a huge red flag.
What's fascinating here is removing specific granular metrics from public view is a classic corporate maneuver. A company usually only stops reporting a number when they anticipate that number is going to start looking very bad.
So who are the logged out users exactly?
They're exactly that drive-by traffic coming from Google searches.
Oh, wow.
By hiding that specific metric moving forward, Reddit is signaling a highly defensive pivot. They are trying to shift the narrative away from public discoverability via search engines and towards forced loyalty within their own walled garden.
I mean, I have to push back on whether this daily destination strategy can actually work for them long term.
How do you mean?
Think about the psychology of how you actually use Reddit for practical things. If a user only goes to Reddit when they have a highly specific need, say, they need advice on how to fix a leaky PVC pipe under their kitchen sink, or they want real reviews before dropping $2,000 on a TV can, the company realistically forced them to use the app every single day like a traditional social media feed.
It's a tall order.
I am certainly not going to scroll a feed of plumbing advice every morning just for entertainment. Reddit is an archive of knowledge, not a dopamine feed. Can you force a user to treat an encyclopedia like a comic book?
That is the multi-billion-dollar question facing the company right now. Reddit's unique value proposition has always been its utility. It is a vast, searchable archive of hyper-specific human knowledge.
Right.
Trying to transform an archive into a daily habit feed is incredibly difficult.
Yeah.
You risk alienating the utilitarian users who just want quick, authentic answers to their problems while simultaneously trying to compete head-to-head with the addictive, algorithmically tuned platforms built purely for entertainment.
Like TikTok.
Exactly. It is a very precarious tightrope to walk.
So what does this all mean for you, the listener? We started this deep dive by asking a simple question. Why did a company with 61% revenue growth see its stock drop 10% in a single day?
And the answer is that Wall Street isn't just looking at the balance sheet. They're looking at the battlefield.
Yes. What we are seeing with Reddit is a preview of the impending war for the future of the internet itself. It is a fundamental battle between human authenticity platforms, where real people actually talk to each other and debate ideas, and AI synthesis search engines that just want to summarize that human talk and keep you trapped on their own page.
The financial numbers we unpack today tell us that authentic human perspective is more valuable to advertisers than ever before. Brands want that high-intent traffic.
They're desperate for it.
But the traffic numbers, specifically that slip in U.S. daily active users, tell us that the AI gatekeepers are changing the rules of how everyday people access that perspective. Which, leaves us with the final paradox to mull over.
Let's hear it.
Consider this cycle. These massive AI models rely entirely on authentic human conversations to train themselves.
The oil.
Right, the oil Steve Huffman talked about. But those exact same AI models, through features like Google's AI overviews, intercept the web traffic that keeps platforms like Reddit financially alive.
Oh.
Could AI eventually starve its own food source? If platforms built on human interaction cannot survive without the referral traffic that AI is currently intercepting, where will the artificial intelligence get its fresh, authentic data in the future?
If the AI kills the restaurant, there's no one left to cook the food. That is a thought that will definitely keep you up at night. Thank you for joining us on this deep dive. Keep questioning the digital ecosystem around you. Pay close attention to where you are actually getting your information, and we'll catch you next time.